Good morning.
Goeiemôre.
It's a Thursday again. A Thursday, eh?
Ja, Thursday.
Donderdag. South Africans call it Donderdag. It's a day of thunder.
We had thunder yesterday.
It was quite nice.
It was so nice.
Very nice.
When we first arrived in New Zealand, we didn't have a lot of thunder, but it's becoming more regular now.
And it's a rather interesting phenomenon for the Kiwis as well.
They're
not used to thunder, and they reckon thunder is not a very good thing.
Very scared of it.
When I do hear where they come from. So.
When you go to the shops and there's thunder outside and you leave, they say, be careful of the thunder. I was like, we're the ones that's standing outside watching the thunder.
Yeah. Total different ballgame here than that on where we come from. You wanted to say something?
Oh, before you start, does everyone know what you're going to talk about insurance? But before we do that, I don't know if any of you know community theatre. Was it a thing in South Africa?
Yes, it was.
Was there community theatres? We just didn't go to them.
No, this was much smaller scale than...
Oh, okay, yeah. In New Zealand, especially here in Tauranga, community theatre is a real thing. So this is where the tickets are really cheap and affordable, and the theatre is run by community members. So they've got cakes and wine. You can buy wine and drinks and whatever not expensive. And all the actors are from the community. And we went to a few community theatres.
Not all of them are good.
No, not all of them are good. But last night
was the stunner.
If you're in Tauranga, the 16th Ave Theatre is a really, really nice community theatre. We went to watch Beauty and the Beast. And it was hilarious. It was so funny. It was so interactive. It was really, really good. And the acting was brilliant.
And the fact, if you think it was community members who has got no actual formal training of acting.
Yes, they were amazing. We really enjoyed it. And you can buy tickets from $20 to $30. So it's really not expensive. It's small and cozy.
And that's for nearly 2.5 hours out.
Yeah, it was a really good evening. So if you haven't, I think it's still on until the 6th of December. What's today?
I don't know.
Until the 6th, if you're in Tauranga and you didn't see it yet, do yourself a favor and go and watch Beauty and the Beast. Okay, that's community theatre.
All right, so say good morning to Lorette. Good morning to Vanita. This morning, I'm trying to explain a bit about insurance and what you really need in New Zealand. But I've got about 2 stories, and both of them, I've got a lot of good stories. Well, there's tons of good stories out there, but I've got 2 bad stories. It was about 2006. I was working with Standard Bank, and I did a lot of trouble for a young guy and his wife. They were about 29 and 28, something like that. I did a lot of work for them, done all the insurance policies, everything, and it wasn't expensive. It was less than 100 Rand at that stage per month because they were young. We gave them R1 million of about everything that they could get, and so forth, and so forth. And he basically really needed it because he was his own boss. He was a builder. And the day we were supposed to go live, we've done underwriting, everything. That day he said to me, nah, he doesn't think he's going to take it. So, okay. I stepped back. I never force sell. I will never in my life force sell. So I walked away and said, let it be. Get hold of me when you need me. And about 3-4 months later, I was sitting at my desk in Standard Bank, and I looked up. I saw this guy hovering at the door, and I knew he wanted to come and speak to me. I just had that feeling. And eventually the person that was with me left, and he came over, and when he came to my desk, he sat down and said, he didn't even say hi. He just said, how quickly can we get that policy on the go? And I just asked, what's wrong with you? He said he had a heart attack. At that stage, it was too late for him to get any cover. What happened to him afterwards, I don't know. I didn't keep up with him. For the next 5 years, he wouldn't have been able to get any cover at all. But if it was different, if he took that policy 3-4 months ago, that morning he would have sat there as a millionaire. He wouldn't have had any any problems,
Yeah.
money problems, nothing. So
I think what people sometimes don't get or don't know is that when you are sick or when something has happened, say you were diagnosed with cancer or whatever, you can't get cover.
that's the one thing. And people sometimes think once we have it now we can get cover and we can claim. It's like, I used to use this analogy of taking your car, having an accident. Now you phone Tower or the AA insurance and says, guys, I want to insure my car. I've just had an accident. I want to claim. It's very much the same thing. And that's the way that life insurance look at you as well. And the one thing that life insurers look at every person has got the date that you are going to die, according to them. Because they need to make money out of you as well. This is not a charity thing. So they need to make money out of you as well. So every time you get underwritten anywhere, somewhere there's a date saying you will die at this age due to your weight, your length, male or female, the fact that you've got certain underlying conditions.
So this is where the underwriting comes in.
This is where underwriting comes in, and that all determines the date of your death. And if you die or not die, it's irrelevant to them, but they have got this experience that they built up over many years of how a person that looks like you will act and how sick you will become and so forth. That's why they could charge you more if you have certain illnesses.
Yeah.
They could even say, we're not going to cover you for certain stuff.
Yeah.
So it's all up to what's happening in your body. I have to get back to why would you ever want to take out any cover, any life insurance, trauma, dreaded disease? Why would you ever want to have that? The reason why you have that, point one, is so you can get a payout in case something happens. So a lot of people forget that's the end result.
Yes.
You say let's use a company like AIA. I want life cover. So I go to AIA or to somebody like me that goes to AIA, I get you life cover. Now that contract states certain things. Either you're going to live forever, which we know is not. So AIA has got a date that you are going to die, and they has a price that they are going to charge you. So this price comes back to the amount that you could claim. So at death or terminal illness, there is a certain amount that will be paid out. That's part of the contract. That's a physical contract amongst each other. So you've got a contract with a company to say, if this happens to me, you will pay me a certain amount. It could be cancer, it could be heart attack, it could be this or that. And a lot of people forget, the younger you are, the cheaper these are. And lock that cheapness in if you can afford that.
Yeah.
And that's rather important. So
Yeah.
I want to go back to claims I had this year. I had a rather large amount of claims this year. I didn't have any death claims, which is a good thing. I had a lot of cancer claims. Cancer claims was about 60% of all my claims. If you look across the spectrum, I've just got the AIA claims stats on the side open here. Cancer claims it's like something like 57% of all claims. And set this year to pay out roughly $1 billion in claims.
Yeah.
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 So
I know that you also had a guy a few years back, very young guy, that just had a stroke. He was working and he had a stroke. And luckily he had insurance.
This is a very weird one. He came to me and he said he was afraid of cancer. That was his big thing. He was very afraid of cancer. And at that stage, he took out the largest ever trauma cover that he could get. He was at the day that he took out the cover, it was the largest trauma coverage that I've ever done in my life. So we got it through at the end of the day. Everything was great. And about 4 or 5 months later, he had a massive stroke. He will probably never get back from where he was.
Yes.
So he had this massive stroke, and we paid out that claim. Those happened very quickly.
Yes.
So we paid that claim. That was the largest ever at that stage. I've since tripled that amount.
Yeah.
But
And the thing is, it's also, he's young. He's very young. His kids are still very young.
Very, very young.
But that money that paid out,
it set them up. Not for life.
No, but his wife could buy a house.
The other thing is that they could stay in New Zealand due to that money.
Yes.
And they could buy a house, and they took part of this money towards buying the house.
Yeah, and I mean, life's not easy for them because he's in the facility, isn't he?
He's in a facility. The drawback is he will never again be able to to contribute towards the family.
Yeah.
Unfortunately
Yeah.
not. But his contribution that he did was
Yeah.
at the day that he had the stroke.
So would you say, Jan, in my opinion, if you have a family, then life insurance, yes, it's very important
Yeah.
because when you die, at least you know that the family that stays behind
Why-
will be looked after.
Why do you think it's important?
Because if you die today, what's going to happen to me?
Okay, if I die today, what stops?
The income stops.
That's it. So what does life cover does? That you can call it the income replacement in death,
Yes.
basically. And I know there's a lot of, I'm sorry guys, if you're an insurance agent, you do this. I think it's unfair towards your client. They give people an amount of money per month because somebody has died. So you'll get $3,000 to $5,000 per month for 15 years. That's so unfair towards the client. I'll be quite frank. I will only ever give those type of policies to a person who knows that the people they leave behind is not mentally capable of working with money.
Okay. Yeah.
Because now the insurance company sits with your million and they'll pay out $5,000 for the next 15 years.
Yes.
You can take the $5,000. You can't go to the bank and say, you just want to buy a house with the $5,000.
No.
They're going to laugh at you.
Yeah.
You can take that 1 million if you took the money rather than the 1,000 or the 5,000 per month. You can take that money and put it somewhere in a bank and just get interest
Yeah.
on that. It's at a higher payout rate as what they can
Because
give you.
I think the most important thing for anyone that immigrates is to know that when you fall away, that at least your wife or your husband or whoever will be able to stay in New Zealand
Oh, that's important.
and will be able to buy, even if it's just a very small house, just to be able to have something and to stay in New Zealand. You
Yeah.
didn't come to this country to, in the end, send them back where
That
they
is-
came from.
That's the one thing. Husband and wife must have enough money insured between them so that the one that lives behind can buy the house if they don't have one, or
Yeah.
pay off the house.
Yeah.
If you take that stress out of any person's life,
Yeah.
let's say today I'm not here anymore and you have to go and buy your own house. It's a lot of money you have to
Yeah.
get somewhere and have to pay per month and so forth, which probably will not happen at the end of the day.
Yeah. But then I think the next most important kind of insurance that you need to have is the dreaded disease or the trauma cover,
cover, yeah.
because that is the thing that kicks in when something happens to you and you can't work anymore,
for a period of time or permanently.
or you permanently
Yeah.
disabled.
Not always permanently disabled, but sometimes.
Yeah.
But this pays out if you are diagnosed with a type, let's say a cancer, a heart attack, have a leaking heart valve. This is all the type of stuff that we had paid outs this year for. And this payout and that money, the companies or the good companies don't say, oh yeah, go and get healthy and then we will pay out, or go for this operation, go for that. It's paid out on diagnosis of.
Yeah.
So you go to the doctor says, oh shit, you've got cancer.
Yeah.
The doctor doesn't need to say you're going to die of this. The doctor has got to say it's cancer. They have to prove why they say that.
Yeah.
And this is by blood test, and
Yeah.
that'll be enough for a company to pay out.
But I know that that's also really expensive. Isn't trauma
It
cover
is,
really
expensive up to a point.
Okay.
It's up to a point. But for the amount of money that you are getting out and the amount of claims we have on that,
Yes.
I think it's a cheap one, actually.
Okay.
To be quite
And I
frank.
would say, I think for me, none of us wants to have a heart attack or be diagnosed with some kind of illness or whatever.
Neither did I.
But no,
Yeah.
I was just going to say, you can use yourself as an example. But when it happens, and you always think it's not going to happen, or I don't know what we think, we're invincible and it's not going to happen. But when it happens, then it's too late. And I know it's putting money into something that you don't know if you're ever going to use it. But what happens the day that you need it? Because then you can't get the cover.
Yeah. And normally the trauma cover payouts is within 14 days.
Yeah.
So that helps people to be at home, recover from whatever was wrong with them. When I had my heart bypasses, my main thing was to get as healthy as quickly as possible. I actually forced myself to become as healthy as possible as soon as possible.
Yes.
And thinking in retrospect now, I should have stayed another 3 to 6 months. I should have taken
Just
time.
recover.
Yeah.
Yeah.
So to answer a few questions, Vanita,
Yes.
asking, insurance company has changed their policies. Yep, a few insurance companies has changed their policies, and that is in the
The health insurance.
insurance policies. The reason why is there's a lot of problems these days with government health, and more people are claiming on these policies. So the amount that has been claimed in the past few years has gone up tremendously. I think some companies has an increase of 30 to 40% of
Yeah.
claims just in the health side.
Yeah.
So what some companies, and not all of them, some companies are asking you to do a 20% co-payment. So if you have an operation that's going to cost you $10,000, it could be that you have to pay $2,000.
Yeah, it is not on all procedures.
No, not on all procedures, and there's some stuff that is still 100% paid, and some of the other more selective procedures will be paid.
It sounds to me, if I read the things correctly, that it's more like the diagnostic procedures.
more
That's
like
going to
that.
be will be a co-payment on.
Vanita, you can contact me a bit later and give me the company that you are with. I've got an idea if what you say. I think I know the company that you are with. So she said trauma cover is so expensive. It's not supposed to be that expensive. It is more expensive than life cover because you are going to have a bigger claim, or I'm more sure you are going to have a claim on trauma at the end of the day. So she asking, did I have trauma cover with my heart issue? I did. Unfortunately, I did not have enough. I had this idea in my life where I made certain sums up to what age I probably would be able or would have this heart attack or stuff like that. And I worked out my trauma with that. So I started off with $500,000 rand in South African terms. And then each year it was increased by about 100,000 rand. Because I thought I will have something at about age 55. Then I would have had 1.5 million rand of trauma cover. So I had to do what I can afford, and at the time of my payout, I wasn't at the 1.5 yet. I wish I was there.
No.
This was one of the things that I myself, as an insurance advisor, neglected to get. I only got trauma cover very late in my life, and to be quite frank, was on the insistence of my ex-boss. He called me one day and said, "Geez, man, have you got trauma cover?" I said, "No, why? I'm healthy, man. Look at me, I'm good, good." He said, "Get, man, get. I just had a heart attack and I nearly died." And I thought, "Geez, okay, let me get it." I got it.
Luckily, you got it. Yeah,
luckily.
At that stage, we didn't have a house. We sold our house.
We were on our way to New Zealand,
and we didn't even have anywhere to stay. We stayed with friends, and you couldn't work then.
And
I already
I luckily had
resigned.
income protection from coming over from Standard Bank. They gave you income protection as a benefit.
Okay, you get it.
And it was really dirt cheap because I got it at the bank at that stage.
Yes.
And I just kept on with it while I had my own business and just kept on paying this. And that paid me out 40,000 rand a month. So yeah, that could help me a bit. So, but it was a very, very tough time in my life, a real tough time. To be quite frank, a lot of people think they can do this themselves. To be quite honest, I took one of my brokers that worked for me. I brought her in and I sat her down and I said, "There's 5,000 rand. You are running my claim for me." Because I knew I was sick. I knew I didn't have all the time to spend running and rushing this claim and getting this paid out. And she went forward and she just did the claim for me. Yes, I did pay her 5,000 rand. I'm not afraid to say that. But for me, that was cheap for what she really did for me. Because somebody had to go and sit with the companies, had to take in all the medicals, had to do this. And I was so sick. I was so sick. So Rita's saying, if you're in your 50s, you're probably asking for a friend there. Do you recommend changing policies with insurance companies? If you are healthy, yes. And depending where you are, yes as well. I don't work with all the insurance companies. I'm being quite frank. There's some of them that I'm very afraid to work with. So yeah, I'm not naming or shaming anybody here. I just know how some of them pay out. And that's the reason why I won't really work with those companies, because if I am with a company by accident, by default, I got private health with no underwriting, believe it or not, due to the fact that I did work for a company when I arrived in New Zealand. And I know how I struggled to get money out of them. Jeez, they are tough as 10. They keep on forgetting to pay me once I've paid the doctors. I'm not talking about a large amount. I'm talking about $150, $250. That's that. I never had a claim in excess of $250.
Yeah.
So,
But you also
it
know
takes them 2 months basically to
you
pay.
also know
anything.
that you're not able to change companies.
No, I'm not able to change companies. That's why I'm forced to stick with him.
Yes.
If I could change companies and get what I have now with any other companies, I would do it in a heartbeat.
But you won't be able to.
I won't be able to get it. Unfortunately, not. So
yeah, but I think if you're a healthy person and there's nothing wrong with you, then you can chop and change.
I want to put something out there for the parents. Once your kid reach 21 or 23, depending on the insurance company you are with, they are mostly off your life covers, because kids do get a portion of life cover for funeral expenses. They do get a portion of the trauma cover if they should have a trauma incident.
Okay, just explain that.
So you've got let's say $150,000 of trauma cover with AIA, and you've got a kid under the age of 21. If that kid gets a specific illness, let's say the kid has a heart attack or cancer or one of these, let's say it's cancer, because that happens a lot. If that kid has cancer, we can pay up to $50,000 for the kid out of your trauma without affecting your trauma.
Okay.
Without affecting your trauma.
So I still have 150.
You still have 150,000.
Okay.
Let's say if you have $75,000 of trauma, we can pay up to 50% or $50,000, whichever is the least. So we can pay $32,500 of
but my cover will stay the same.
Your cover stay intact. Let's say me and you are on the same policy, and we each have $150,000. You won't even know out of which one of us they pay that.
And the funeral is the same. There's money for
funeral. Is the same up to the age 21, between $2,500 normally and $15,000. I'm just taking broad spectrum about the country.
And I know a thing that a lot of people ask is, do you get funeral cover in New Zealand? But I know that's part of your...
You get funeral cover in New Zealand. Okay, let me explain this and put that out there. You do get funeral cover. It's extremely expensive. For the amount of money that you get funeral cover, let's say you get funeral cover for about $25,000, and it's called funeral cover. There's a company selling that. It's called funeral cover for $25,000. You can basically get about $300,000 of life cover. And life cover has got a built-in funeral cover portion.
Okay, and that will pay out?
That will pay out within 24 to 48 hours after death. It will pay out like this.
Okay, so your funeral cover is part of your life cover. Okay.
Yep.
Okay.
And I know it's bad. And what I tell my clients always, I say, if anything bad happens to you, phone your loved ones first and phone me second.
Yes.
Even if it's in the middle of the night. I've taken calls on Christmas morning. I was sitting in Hawaii, of all places, with our Christmas holiday, and my phone rang, and I knew
something.
This must be shit. Answered the phone, had a problem. I went in, stopped the Christmas party. Everybody else went on with the Christmas party. I went into the caravan, opened the laptop, and 1 hour later, everything was basically sorted out that needed urgent attention at that stage. That was on Christmas morning. So,
and I think that is the importance of an insurance, a guy or a girl that really looks after you. Because when something really happens, you are not going to know what to do. I won't know where to start, what to do. And then that person will be like your saving grace, and just helping you to get
myself
sorted.
I do have a backup broker, although he doesn't work for me. He's in a different company totally, who she will call the day anything happens to me. She'll pick up the phone and say, this is what's wrong. He'll take over. I've made the arrangement. That's that. And it's so important and you need to have a broker that is willing to work through the whole process. I know there's brokers, once it's in claim stage, they charge. That I've heard the horror stories. They charge 10% of the amount and these type of things. Guys, it's not what perhaps I'm old school. I'm old school. I don't know. I must be old school. I don't feel like that's the right way to go. So
Benita's asking, once your child turns 21, what do you do with a full of your
let's go back to that one. This is rather important. I would suggest taking out a smallish type of policy for them. you just basically need $100,000 of trauma, one of these things. But there's certain ways and means to do this policy for them. It's a little bit more expensive than the norm, but they will never increase in price, let's say, up until they're age 65. So they'll
wow.
oh yeah. And it's very, very weird. You have to revisit that at their age 30. It's
Okay.
important because prices differ from 29 to 30, but sometimes, or the companies that I mostly use, they will lower the price.
And the thing is, you probably, when you're 30, you would want a little bit more cover than
Probably, but
when
at
you're
least
21.
you have this
something.
amount
Yeah.
that you got at a stage where your body was 100% correct. And whatever happens after 30, you keep that amount of money that mom and dad started off with.
Yeah.
And you increase that on your own.
Yeah.
So, and it's so important. I know people feel, I don't want to take out life cover on my kid. I will never take out life cover on my kid. But I had a few parents come to me and say, we are going to do a lot of, or spend a lot of money for our children. We're buying them cars. We're buying them, what is university fees, all these type of things. It's going to cost me 200 or 300 those time rand. And we need to have something if something bad happens, because we need to repay this money.
Yes.
So I wrote life covers on those kids.
Ooh.
No. For
Okay,
the amount,
it makes sense.
the
It just
parent was
sounds
spending
really
this
funny.
lot. The parent was spending a lot of money just to set those kids up for life, and they were doing it on debt. So if anything happens to that kid,
the money's gone.
money's gone.
Yes.
Father don't really want the kid ever to pay back the money.
And the
because
thing
that's
is,
what they're
can you
giving
then
them.
at some stage transfer that policy to the kid's name?
Yeah.
Okay. Yeah.
So before let's say the debt has been repaid and everything is fine, and now we talk to the kids and say to them, do you want to continue with the policy?
Yes.
It's a good policy. You don't have this blah, blah, blah.
Yeah.
Something else. I see we're running out of time. So we got, let's say, 2 minutes to quickly. Question last night that I had was, I'm getting old. I'm getting old. I do not want to pay this policy anymore. I do not have any debt anymore. I'm debt free now. And this was $1 million of life cover.
Okay.
So I said to the guy, okay, it's good. No worries. We can do one or two things. Point one, we can cancel it, which is the easiest one.
Yes.
I said, what are you leaving your kids? How much are your kids getting the day that you die?
Yes.
And he said to me, they'll probably have to sell the house. But I said, but your wife is still living in the house.
Yes.
He said, yes, but he doesn't have the money anymore for the policy. I said, I fully
Yes.
understand that. And what I did is I called the kids, and they're taking over the policy. So they're paying out the monthly premiums.
Which is probably not a lot.
It's not that much
Yes.
for $1 million. So
Yes.
if daddy ever goes to the big starry sky, then each kid will have $500,000.
Yes.
They split the premium per year, and that's that.
Yeah. So you can transfer
It's
the
leaving
policy.
a legacy.
It
Leaving
is. That's
a legacy.
true. And the
It's
thing is,
easy as
that is what you've paid for your whole life. If you just, it makes sense. If you can't pay it, you can't pay it. But there are
that's
options.
a fact. But
There are options.
the thing is, don't only insure yourself, insure your wife as well, or your partner, or if you're a wife, your other partner. So whatever way you swing, whatever way you swing. So, yeah, but it's also saying they're choosing the option where the kids will take over the policies. It just makes economic sense.
Yeah.
Suddenly your kids has got an inheritance, and if anything happens to you, and it's sad to think you got to die for money, but
the thing is, and then they have got this, at least the peace of mind that because we as parents, we look after our kids, even if they are 40 or whatever years old, and when that stops, at least
and the other thing is, like my situation now, I'm looking after my mum.
Yes.
There's no life cover there. I'm paying a lot of money every month just to upkeep her. There's no life cover, so I won't have any inheritance from that. But it would have been nice if there was a policy, then I would have paid the policy as well, so that at least I get some, how can I say, some inheritance at the day of her death.
Yeah.
Yeah.
You don't want to sound like funny, but yes,
But
I get it.
Yeah.
I get it.
And I know there's a lot of people who's paying money over every month to their parents living in South Africa that not making it financially.
Yes.
And I know that's hectic, and sometimes you're just too old to have a policy. So
So the main thing is just
and once you have an incident like I had my heart problem, you are going to be loaded like crazy. I got to pay 200% more for every dollar on life cover just to have the same as the other persons who didn't have a heart problem. So
Yeah.
All right, guys, that is us for Thursday, Donderdag.
Yeah. Thanks
Thanks
for
to everybody who
explaining it.
listened. I see we
Yes.
had quite a lot of listeners, especially all over the different media sites.
Yeah, but it is a very interesting topic, and it's
It is.
something that affects all of us.
And if you need any help with this, please don't go and try and do it alone.
Yeah, and even if you just have silly questions, or you
Yeah.
think it's a silly question,
And it's easy to
not.
go online with a company, let's say AA car insurance, and buy life cover through them. At the end of the day, once you have to claim for that, you are on
Your
a
own.
point where you have to deal with a call center, which could be in the Philippines. And they don't understand English really very good, and you got to do all this difficult. While with a broker like us, it doesn't cost you more to use somebody like me than would you've done if you went to the same company at the end of the day.
No,
But once something goes wrong,
then at least you've got
at
a
least you
backup.
got a backup.
Yes.
Your partner phones me and says, "He's here no more," or "She's here no more," and then I put the wheels in motion and we run with that.
Yeah.
All right. Thanks a lot for listening to us today.
Have a
And
good
if you like what
Thursday.
we do, please click like and subscribe on our YouTube channel. Okay. See you all. Bye.
Bye.